Hey everybody, Gary with Basecamp Trading. Let's take a look at a couple really simple setups that we had in crude and how you could have traded those. This is our crude 30-minute chart, and you can see we had a significant line of resistance that went all the way back to yesterday morning. And you see crude pushed up, pulled back, came up, hit it here, 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 and then in the US session, as the old ghost pit was opening, we actually triggered the breakout. And that was with this bar right here. And you can see this was a strong bullish bar, opened at the bottom, closed at the top, and more importantly, closed above this significant line of resistance. Everything was lined up nicely. 5 and 13 crossed to the upside, 50 above the 200, price above the cloud. Fast line crossed above the slow line, so you had bullish momentum, bullish moving averages, and a strong bullish breakout bar. So if you had taken this break, the break was at 55.25. The high of that bar was 55.45. So the potential to grab $200 per contract, yeah, you may not have actually gotten that or not. But either way, you could have at least had your first target. First target's $100 on the breakout. And believe it or not, that little breakout actually put us into significantly overvalued right here on that bar. That wasn't a huge move up, but it put us into significantly overvalued. And we know that when we hit significantly overvalued on our value charts, that typically we're going to do one of three things. We're going to pull back, we're going to consolidate, or we're going to reverse. Typically, what you do is you pull back a little, consolidate, and then make another leg higher. That's typically what you do, and that's what we ended up doing here. And we usually need about 30 minutes. Once we hit significantly overvalued on the 30-minute chart, we usually need one, maybe two bars to kind of relieve that condition before we can make another leg higher. And again, just kind of followed the script, hit significantly overvalued, pulled back, consolidated, set up the 30-minute bull flag right here, set up our 30-minute bull flag. We triggered that 30-minute bull flag with another really bullish bar, open right at the bottom, closed right up here at the top. So nice bullish trigger bar. At the time we were triggering this bull flag, we were triggering a bullish inflection on momentum. So that was a good confirmation for the breakout here. The setup bar itself was a bullish bar, left the bottoming tail, and the entire body of this bar was all buying. So we even had a nice bullish setup bar, and then it was triggered by a really strong bullish bar. These are the types of bull flag triggers and bull flag setups that you like to see. Again, all of our moving averages in alignment. As we were triggering the bull flag, we were triggering a bullish inflection. Fast and slow line already crossed to the upside. Everything about that was a good confirmation and a good setup. And crude continued to push higher for quite a while. That bar triggered in on a break above 55.41. You had a high all the way up at 55.95, so potential $500 per contract. Again, nobody's catching tops and bottoms. Plus, you had a lot of whippy action right here on the inventory report. And so that may have even scared you out for all I know. So you may not have traded that, but at the very least, this bar alone would have given you $400 per contract. So just depends on how you were trading that, because that bar triggered in 55.41. The high of that bar was 55.85, and I'm sorry, I think I said 55.95. I meant 56.33 was the high of that bar right there. So again, you had the potential to make $900 per contract. I apologize, I misspoke on that. Again, I don't know if you would have stayed with that trade. This bar right there probably would have scared you out. So you would have been looking for another entry. So you wouldn't have taken this bull flag all the way up into here. That's pretty unlikely because, again, this was a big pullback and this probably would have chased you out. I'm sure it would have stopped you out, but that's okay. We had some additional entries. And speaking of which, let's talk about a couple other ways you could have traded that. This is our 5-minute chart. And then right in here, you actually had a power line break right here. Now this happened in the London session, so probably weren't trading in that, but you had this power line break and started this push up, and you were making higher highs and higher lows on the 5-minute chart. And then you went into compression right here and started trading sideways right there. And then right here, when you were breaking out of compression, that's when you were triggering that 30-minute bull flag. That compression break was a break above 55.41. That bull flag trigger was a break above 55.41. So you could have taken the 5-minute compression break also as a way to enter that trade. And you had a 5-minute compression break being confirmed by a 30-minute bull flag. So if you're looking to trade a smaller time frame chart, you can trade with less risk. And you had a nice bullish breakout right here as well. You had a bullish bar there, led right up to resistance, and then the bar that broke out opened right at the bottom, closed right at the top, and it closed above resistance. So you had a nice bullish breakout bar as well. Momentum had gone positive, fast slow line crossed to the upside. So you had a nice entry off the 5-minute chart potentially. You also had our Renko chart that gave you some opportunities, and I like the Renko charts probably the best. Right in here is where you had that initial compression break, and that's where you could have grabbed potentially up to $200 per contract on this run here. Probably wouldn't have got 200, but you would at least got your first target because you lock in your first target at 100. And then you set up this Trender Pro 2.0 entry bar with the wick off the 18. And right here, this bar triggered above 55.49, and as this bar was pushing up, you were actually triggering that 5-minute compression break and the 30-minute bull flag. So you could have taken your entry here if you stayed with Trender Pro 2.0. No reason to get out till up in here. You were forming some bearish divergence right here. So you probably would have exited on the reversal bar, but potential to grab your entry would have been, if you actually traded the Renko chart, your entry would have been around 55.50. That bar closed at 55.85. So, $300. You actually had the potential to grab more than that. Could have grabbed probably 500. You probably would have locked in at least 400 on that. But then your runner, you would have grabbed $350 on your runner if you're trading more than one contract. You pulled back, set up the wick off the 34 with another Trender Pro 2.0 entry bar. And again, these cyan bars are the signal bars off of our Trender Pro 2.0 indicator. And so you had a 2.0 entry bar, wick off the 34. You had a nice momentum reset. You can see we pulled back down inside the 25, so you had a nice momentum reset. Your entry on that bar would have been a break above 55.81, so let's just call it 55.82. The high was as high as 56.26, so you had the potential to make another $400 on that move up right there. Starting to get extended, you may or may not have taken that fast line zero touch entry. Could have grabbed a couple $100 per contract if you did. But anyhow, nice simple 30-minute bull flag or simple compression break off the 30-minute chart in crude that led to several nice opportunities.